Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 unanimous strong buy stocks with some big upside potential. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy Friday. Today we're taking a look at 3 companies that not only have unanimous strong buy ratings from Wall Street analysts, they also have a strong buy technical analysis score. I found these companies using a screener that I don't often utilize. That is the technical analysis screener. You can filter for stocks with a few different options here, including a strong buy technical analysis score, which combines the moving average score and oscillator score to assess a stock's technical strength or weakness. On top of that, I wanted a strong buy consensus. We looked at a week time frame here and also an outperform rating on the TipRank Smart Score to give us a list of companies down below. So today, we're going to take a look at these 3 strong buy stocks, what it is that they do, and of course, what those Wall Street analysts are expecting for the stock's future. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into today's stocks. First on the list is a company called Griffon. They trade under the ticker GFF, currently priced at $78 per share. In the past year, they've climbed 12% overall. In the last 3 months are up slightly at 2%. Griffon is a diversified management and holding company, overseeing an industry-leading portfolio of brands. They manufacture and market consumer, professional, and building products through 2 main segments. One is their home and building products, under which they are one of North America's largest providers of residential garage doors and commercial sectional and rolling steel doors. Then they have their consumer and professional products, which includes residential and commercial fans, landscape and lifestyle, and home storage and organization. Their most recent earnings report was on August 6th, and it did highlight some strengths and challenges. While earnings per share were in line with expectations, revenue did fall a bit short. While they did see strong performance in their home and building products segment, on the other side, with consumer and professional products, there was some weakness, with revenue decreasing 16% compared to the prior year. With that, they did reduce their revenue expectations by $100 million to $2.5 billion. But the company did see improved EBITDA margins, had a successful stock repurchase program of $40 million during the quarter, and saw consistent dividend growth. They increased their dividend for the 56th consecutive quarter. Back in August, we did have an analyst at Raymond James who reiterated their price target. That followed a price target increase back in May, where the firm noted that their CPP segment is challenged by soft demand and tariffs, but the crown jewel of their home and building products segment is performing above internal and external expectations. They also believe that an outright sale of the company is possible at some point and expect Griffon to be a significant buyer of their own stock in the interim. The Griffon stock has 3 current analyst ratings, coming in as a unanimous strong buy. Their average price target of $105 implies an upside potential of over 33%. Looking at those analyst ratings down below, we have a couple at 27% upside and another with an upside of 46%. For our second stock today, we're looking at Carpenter Technology. They trade under the ticker CRS, currently priced at $247 per share. In the past year, they have climbed 54%, but in the last 3 months have cooled off and are down 12%. Carpenter Technology is a leading global manufacturer and distributor of premium specialty metals and alloys, specializing in high-performance materials designed for demanding applications. The company focuses on innovation in metallurgy to solve complex challenges in critical industries. They serve customers worldwide through their own network of service and distribution centers and employ around 4,300 people. Their latest earnings report came out near the end of July, and while revenue did fall a bit short of expectations, overall it was a very successful quarter, with record profitability and strong cash flow. Earnings per share of $2.21 beat expectations by 14 cents, while revenue of $792 fell about $35 million short of expectations. They did deliver their most profitable quarter on record with $151 million in adjusted operating income. That was a 21% increase year over year. They also generated $201 million in adjusted free cash flow and saw significant market growth. Following that earnings report, we heard from an analyst at JP Morgan, who said that the post-earnings sell-off is a buying opportunity. They see many positives from the earnings call, including bookings being up 18% quarter over quarter and rising engine sales. The stock thesis hasn't changed, and they maintained their buy rating with a $305 price target. Carpenter Technology has 4 current analyst ratings, coming in as a unanimous strong buy. And the average price target is $322.50, implying an upside potential of over 30%. Looking at those price targets down below, we have 3 all at 23% upside and 1 with an upside of 52%. If you've made it all the way to our third stock, then do me a favor and make sure you've hit that thumbs up button. Third on our list today, we're looking at Carriage Services. They trade under the ticker CSV, currently priced just shy of $48 per share. In the past year, they've gained 47%, fairly flat in the last 3 months at 1.4%. Carriage Services is a leading provider of death care service and products in the United States, specializing in funeral and cemetery operations. Headquartered in Texas, the company operates a network of funeral homes and cemeteries, offering both at-need and pre-need services. They focus on consolidation through acquisitions, aiming to deliver high-quality, personalized experiences while creating long-term value for shareholders. They employ over 1,000 people and aim to provide compassionate and personalized care to families during their time of need. Their Q2 earnings report came out near the start of August, where we did see both an earnings and revenue beat. Earnings per share of 74 cents came in 1 cent ahead of analysts' expectations. They saw their total funeral operating revenue grow 1.4%, and their financial revenue rose over 18.8% to $8.2 million. The company also moved back to growth mode with acquisitions under contract, and their updated guidance anticipates revenues between $410 to $420 million. Just earlier this week, we did have an analyst at Raymond James initiate coverage on the stock with a buy, saying that the firm views Carriage as a turnaround story under the new management team. They have EBITDA growth tailwinds from the streamlining of their operations, efforts to grow their pre-need business, and the potential for acquisitions with a better balance sheet. They see room for the stock to close its valuation discount to Service Corporation. Overall, Carriage Services comes in as a unanimous strong buy with 4 current analyst ratings. The average price target is $60.25, implying an upside potential of 25%. Looking at those price targets down below, one from Roth MKM has an upside of 16%, while another from B. Riley has an upside of 35%. So that is a quick look at 3 stocks, both with unanimous strong buy ratings from Wall Street and a strong buy rating on our technical analysis score. Let me know your thoughts on these companies and if they were on your radar or not before. I know a couple of them were new to me, and I always appreciate hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always sticking to your own investment plan. Thank you guys so much for watching. Have a great weekend. I'll see you back here next time.